Hopefully the sound issues has been solved. Andrew, how's the chat looking? Can people hear us now?
Can you guys hear us?
Yeah, okay, it seems like
perfect.
people can hear us. Okay, perfect. So
GDP, you were talking about the GDP.
Should I talk about GDP again?
Well, let's go through Amazon first. Amazon is down 5%. So the news are coming out why. The e-commerce is down, which everyone was expecting that the e-commerce is going to be down, but maybe the cloud services are beating up. Apple, another big one, it's slowly dropping. It was up big in the during the market hours. It's slowly dropping, but it hasn't seen a huge volatility on it yet. But Amazon definitely apparently disappointed because not a lot of volume. There's just only 25,000 shares dropped. So it might slowly recover. So slowly is recovering, coming up as people are really trying to digest the news. They released the transcript, and probably the CEO is slowly moving and saying something.
Yeah, I think usually the call is 1 hour after the earnings is released. So probably in 30 minutes or 45 minutes, the CEOs are going to come on the call and start talking. One of the things is yesterday I set up a straddle. Again, straddle is a market neutral strategy. You're just betting on, breach of expected move on both Facebook and PayPal. And I made money on Facebook, lost money on PayPal. Overall, it was a successful trade. But I didn't do it for Apple or Amazon. Reason being is when you have a strong day like this, stocks moving 4 or 5%, it makes trading earnings with options really, really complicated, really challenging. So, I kind of took a back seat, and I'm glad I didn't pay for any premium because it would have been really expensive. So glad I didn't do that. But Andrew, while we're waiting till our news page and trading terminal kind of shows a little bit more information about these two earnings and why they're down, let's go to the GDP.
So the GDP numbers came in this morning, and surprisingly was down. The GDP actually contracted a little bit, and that's essentially what the recession means when the economy is slowing, shrinking instead of expanding, and spending becoming less and less.
Yeah.
But the market rallied after that. In the midday, we had a little bit of a sell-off, and after that, we had a big rally. And Adi, you can explain to us exactly what it means for the Feds and interest rates, and why actually markets rallied when the GDP is actually shrinking.
Yeah, exactly. So recession, when we talk about recession in the market, the definition of a recession is 2 quarters of negative growth. So we had 1 quarter. If the next quarter is also negative, then that's kind of a textbook definition of a recession. But a lot of traders were kind of baffled today. Hey, I shorted the market because I saw the GDP going down. How come I'm losing money? How come market is rallying? And the answer to that is really understanding what GDP really is and where is each component coming from. So let's go to the slide deck. I talked about this. We had some sound issues, but this is the formula for GDP. I had a call with one of our interns today, and I asked him the formula for GDP. He had to Google it. Memorize this. This is a really important formula. If you're a trader, you're a participant in the market, you want to know this formula. It's government spending, private sector investment, personal consumption, and net export. You usually don't care so much about government spending. These two are really important: private sector investment and personal consumption. These shows the health of the economy. Both of these numbers were really strong. The reason the GDP was actually negative was net export. So US basically imported more than it exported, which totally makes sense because there's a recession going on in Europe, there's a war going on, China is in lockdown, so it definitely means that the imports of US are going to slow down. So when you actually look at what this number looks like the breakdown of the GDP, you can see, consumption was up, business investment was up, inventories was down, which means people are buying more, and net trade was down a lot, and that's why the GDP was negative. But that's actually a good sign. Overall everything is looking healthy, and that's one of the reasons market rally, Andrew, is consumers are strong. That's kind of the theme of what is happening. Another reason market rallied is if the economy is contracting, that actually means Fed cannot be super aggressive. So that means they got to bring the interest rate down lower. They're probably going to do their hike cycle, but maybe at a slower pace, and then do another round of easing. And every time interest rate is low, that means lower discount rate and higher valuation, right? Lower risk premium for equity market and higher valuation. So really, really important. All of these are connecting to one another. And this is where, a little bit of knowledge of macroeconomics can really help you as a day trader, as a swing trader, as a position trader.
If you sign up to Ardy's newsletter or into Brian newsletter, he's discussing about all of this stuff. Both of them, they have the newsletter that talk about what's happening on the macroeconomic scale and how it can impact your swing trading and day trading. For example, we know that in a volatile time for the interest rates, the currency market can get affected, or high valuation companies like technology sector, QQQ, can be impacted. So it's very important to follow this. Not necessarily you need to be an economist, or not necessarily your opinion really can affect your lifestyle, but it's good to know exactly why and what sectors are moving, so you can actually make a good trading decisions based on that.
Yeah. There's a really funny saying, Andrew. It's like, do you know why God created weathermen?
No, I don't.
To make the economists look good.
Oh, yeah.
Because the only people who have worse prediction than the economists are the weathermen.
Exactly.
Right? Because it's so hard. And this is really interesting. I want to show you this. Look at the average survey of economists. We're seeing 1% increase in GDP, and we had negative 1.5. So look at the disparity here. They were extremely off when it came to that number. But again, the key thing you want to look at in terms of health of the economy is personal consumption. And personal consumption is still at a healthy rate, and it is growing. So that's really, really important. Let's go to our trading terminal and see if any news has come out from the earnings. Andrew, how are the stocks doing? How's Amazon doing?
So Amazon is down 6% after release of earnings. I haven't still read the news that what exactly is going on in their statements. Apple reported Apple down a little bit as well, 3% up right now, but it closed actually higher than that. It was closing almost 5%. But after the earning is releasing, it's just struggling a little bit, but it's still positive. Apple 3.3%. Facebook kept the whole rally, still is up 17%, went up as high as 19% in the morning, but their earning was actually released yesterday. Amazon there's not a lot of volume going on, so it might be a little bit of a reaction from certain players, but definitely there was something that they didn't like it. Amazon, definitely people are expecting a little bit of a slowdown on their e-commerce business, but they were hoping that by their cloud services and ad revenue, they can come up some of those shortfallings. SOXL was one of the biggest winners of the industry today. I know semiconductors were really, really beaten up. NVIDIA and AMD were, the ones that they really had this issue. But now what we're seeing is, both of them rallied today, and they had a really, really nice, really nice rally. SOXL from the lows of 22.40 went up all the way up to 26.30. That's a really huge rally.
That is definitely a huge rally. Like we've talked about this on, off camera, private. I said probably the best trade of the decade, if you can stomach the volatility, is going to be SOXL, right? Semiconductors, chips are being used in everything. Computers, Meta, anything electronic is going to be used. Chips. SOXL is a really good ETF of NVIDIA, AMD, ASML, all these guys down the value chain, vertically integrated. And it is leveraged, so, but you have to be able to stomach the volatility. It is really, really volatile.
So Tesla still shows the weakness, is down again another 2%, sold off to low 800 to almost $820. It did bounce back with the market. We don't know exactly what's causing this huge sell-off on Tesla, unfortunately. Is it just some shareholders are getting out? Elon Musk himself is selling to get the funding for Twitter. Nobody exactly knows, but he had a really, really bad couple of days that from $1,000 sold off all the way up to $820. That's almost 20%.
That's 20%.
18% drop in 3 days. And it doesn't seem that it has a lot of momentum to the upside.
Yeah, this is going to be interesting because Tesla is one of those heavy hitters in the market, right? Big market cap, it can really move the market, it can really impact the sentiment of the market. So you definitely don't want Tesla to sell off a lot. I talk about merger arbitrage. Maybe it might be a good idea to kind of discuss it a little bit further. So for those of you who don't know, merger arbitrage is actually a trading strategy. There are hedge funds that solely focus on merger arbitrage, and is they go and find companies that are targets, and they go and find companies that are the potential acquirer. So I put A here and T here, and they go short the acquirer and long the target company. So when the deal happens, the target company usually pops because the acquirer is overpaying for it, and the acquirer goes down. We're seeing, even though Tesla really didn't buy Twitter, we're seeing the same kind of reaction here. Tesla is going down as if Tesla is acquiring Twitter, and Twitter went up. So some of this sell-off is kind of explainable for me in terms of bigger picture. But again, remember, Elon Musk is basically is getting a loan against his Tesla share. So I read somewhere if Tesla falls below 700, there is like a caveat in the loan that the financing rate could increase tremendously if the share prices goes down. So this is going to be a risky business. Definitely one of the reasons Twitter is not at 54.20 and is trading at a discount right now is because of all these uncertainties, right? Because market
exactly.
don't know.
The deal might not go through. Another thing, Adi, is very, very interesting is surprising the earnings that nobody really was expecting is Roku.
Yeah.
All the streaming services got crushed after Netflix disappointed earnings, but Roku reported earning right now, and it went down from $100 down to $75, but it's now bouncing back to 92. So it's still up at trading up 8.4%, which was the close, previous day, just the close at the open. So it means that volatility is just crazy. That 30% drop and now back.
So the 30% drop was after hours?
Yeah, it was after hours. Yeah, so after hours, at the market close, and you probably can see my screen, Roku, right now. Guys, and went up to 100. Santiago, if you can put my screen, and then it came down to $75, and now it bounced back. Again, the volumes in the pre-market and post-market are not huge, so they are not necessarily reflective of what market participant and Wall Street, really working and thinking about the company. But that definitely is a drop. Like for example, Amazon drop has been significant. But still not a lot of volume going through. So maybe Wall Street changes their mind or shows their opinion tomorrow.
Yeah, and these stocks been so beaten down that you always ask the question, how low can you go? Yesterday we talked about valuation and the F for it, right? The fundamentals, like the Qs as a whole is trading at 15 multiple of free cash flow, which is historically on a historic basis is quite cheap, right? And you think to yourself, is Facebook a new value company? Is Warren Buffett going to invest in Facebook? How cheap it is getting, right? So really, really interesting. Let me see. Let's go ahead into our trading terminal and see.
I think Hood also had the earning. Robinhood had earning. Let's see what they did. Down 3%. Unfortunately, they were up. They were up a lot during the market hours, but now they're dropping. They're down 3%. I think they had some sort of they had almost 10% drop from the close. Right now trading in the pre-market. Another bad news for Cathie Wood and her fund ARK Innovation, because the second biggest holding in ARK is Teladoc. They were betting on the telecommunication and medical telecommunication. The doctors are going to go all through online, but unfortunately the earning yesterday, it was last night, it was really bad, and it's down 40%, which took down the ARK 3%. And the other holdings of Cathie Woods, which is Hood and Tesla, are not necessarily doing well. So it's definitely not a good time for Cathie Wood and her fund, and it's down from the highs of $133.48. And this is an exchange fund. That's is a diversification included in that. So that means that how the market has shifted since last summer.
Yeah. Yeah, it's very, very interesting when you say diversification, Andrew, because the key thing in diversification really is correlation and covariance. And she got a bunch of stuff that are really, really highly correlated to one another. So I don't know if necessarily you buy ARK, you really diversify, because all those stuff that are into that exchange fund, they're so correlated with one another that it's like you're buying a venture fund, really. Very risky. Andrew, as the news is coming out, I saw this and I thought people will find this interesting. Amazon has a huge amount of investment in Rivian. So now its net income is going to fluctuate based on the share price of Rivian by a lot. So Amazon reports 7.6 billion Q1 loss on Rivian investment. So as the Rivian prices, like, you remember last quarter, it netted a huge profit because of Rivian, because Rivian was trading at like $120, $130. Now it's trading at $30. So each quarter you're going to see Amazon earnings really fluctuate because of that investment they have in Rivian.
Yeah. So there was another one that another important earning. Intel was up at $47, and now it's sold off, went red, and now it's recovering some of the losses at the close. So the market is bouncing back. Right now, it's trading almost flat after a huge gain that he had during the market hours.
Wow.
So they beat the estimate in the revenue, but there was something in the guidance that people didn't like.
Yeah, very, very interesting. Let's go back and see. Let's go back to the slide deck. Any questions come in or in the chat?
So Adi, people are asking about where they can sign up to your newsletter.
So it's going to be in our Peak Capital Trading website. By the way, Andrew, congrats on selling out this cohort on the Peak Capital Trading. We just
thank
sold
you so
out,
much.
Right?
Yeah, so we did max out. Actually, we went a little bit over limit for Peak Capital Trading Bootcamp, and it's still 2 weeks away.
Yeah.
And we were not expecting you to fill all the spots in our next bootcamp. If you want to learn how to trade in a very systematic way and build a trade book for yourself, then you should definitely consider the bootcamp. But if you want to learn trading by yourself in a way that just trial and error and just trading a small size without really a systematic approach, maybe bootcamp be a little bit frustrating for you. But more than anything else, bootcamp is joining a group of committed people that hold you accountable to have a strategy, that's what we call it a trade book, and make sure that you are sticking to your trade book and giving you the feedback. And that was a really, really successful bootcamp that we run in the last couple of years, and we made it better and better after every bootcamp.
Yeah, no, exactly. Well, congrats on that. But in terms of my newsletter, it will be on the research tab. So if you just click on the research, if you can see my screen on Peak Capital Trading, click on the research tab, and then you will be able to kind of sign up. Again, my approach is very top down, so look at the bigger picture, look at the macro, and then work my way down. So from the top all the way down, like work my way down and come up with investment theses, trading theses, things in that nature. In terms of accountability, you talked about accountability. You posted that picture on your newsletter. Do you have it up? Can you bring it up?
The accountability. Oh yeah, I can definitely bring it up. But before I'm doing that, I'm actually posting our Twitter as well. If you guys are in YouTube and you're interested in being in touch with us, I'm just posting in the chat. So follow Ardi and I, and we're happy to answer your questions as well in the YouTube chat. But accountability, so talking about accountability, Ardi and I are going to the gym. Ardi, you want to explain that until I bring it up?
Yeah, I mean, Andrew, discussing about accountability, we go 2 days a week. We go to a personal trainer. It's like a dungeon, a basement. You go downstairs like a semi-private gym, and we work out. And the workouts are always the same, quite boring, but we still go because both Andrew and myself feels like if we don't go there, we're not going to.
So the picture is right now in my screen. If Santiago want to put in that. So yeah, it's a gym. It's downstairs. It's really like a rat place. And Nick is a great guy, but he's not fun. He's very serious. And sometimes we joke with him that, Nick, we've been doing this for years together, and there's absolutely nothing new in your sets. Always the same sets. We're going a couple of times through it until our hour is over. But the reason that we're going in there, in that place with no view, no beautiful people around, is just because the accountability that Nick is doing for us. I mean, we are paying him to hold us accountable to go to that. Who wants to go to the gym? Other than that, we're just talking each other out of this workout like 100 times a day. But that's the whole thing. That's the whole purpose of boot camp. Being around a group of people, paying a little bit makes you accountable to work on that.
Yeah.
And people don't take things that are free usually as granted. But if when you're actually investing in it, you take advantage of that.
Yeah, definitely. That's kind of the whole purpose of Coursera and things like that. I'm surprised, when you send that email, I'm surprised nobody roasted me for my legs. Somebody says, hey, you should train legs more often.
You should train legs more often or run. I'm actually a good runner.
Yeah, exactly. So we talked about GDP and why the market rally. Hopefully this explanation is really important. This stuff is really fascinating. The way these interact with one another. For example, if government spending increases, you're going to see private sector investment decrease. And the reason for that is when government is spending, that means they're running a budget deficit. When they're running a budget deficit, that means in the future they have to increase the tax rate. That kind of put a limit on private sector investment. The private sector is not going to invest a lot. So when you're looking at GDP numbers, you want to care about personal consumption. You want to care about private sector investment. You don't really want to give a lot of attention to government spending or the net export. Really understanding these dynamics can be really helpful to kind of pass through the data and really get into a little bit of a deeper understanding of the market. Let me see. Andrew, I prepared a couple of quotes from these earnings that I thought was really interesting. So this is from CFO of Visa, and if everyone can see my screen, that would be helpful, Santiago, as well. So it says, if anything, discretionary spending, especially from affluent consumers and credit card holders, has been going up quite healthily. So in general, there isn't any evident impact of inflation. So this is Visa. You remember last week, I said Visa and MasterCard and American Express, these are a few companies that you really have to read their reports and listen to their transcript, listen to their earning call, because you can get a lot of information. These guys are saying, hey, consumers are spending like there's no tomorrow. So that's a good sign, right?
But they said that they're actually going up healthy, not too excessively, but they're not shrinking. So people are still not really worried about the inflation. So it says in general, there isn't any evidence impact on inflation. But inflation comes down when people start spending less and less. But they emphasize that it's still healthy.
Yeah, and that's important, right? So you want, it's important for small caps, it's important for cyclicals, anything that is kind of sensitive to spending. This one is also interesting. North American dealer inventory remains at record lows. So remember, one of the leading indicators, if you want to predict a recession, is inventory levels. So if the inventory levels is going up, that means people are not buying as much, it's piling up. That is usually a leading indicator that the slowdown is happening. Polaris CEO is basically saying inventory remains at record low with healthy demand. Again, look at the word healthy, has been repeated a lot of times. Healthy demand, further constrained by persistent global supply chain headwinds, blah, blah, and improving inventory levels. So again, not a lot of build-up in the inventory level. So this is also good in terms of earning. I thought I'll pick these two quotes from the earnings this season and I talk about it. I had another really interesting fact as well I wanted to talk about. Oh yeah, this one as well. So far, this was as of yesterday. 50% of S&P 500 has reported, with 76% of the firm topping projections. This is according to Credit Suisse, an investment bank. The earnings season overall has delivered more good news than bad news. So that's something you want to pay attention to as well. So we're almost halfway there with the earnings. Probably a couple more weeks and we will be done.
That's very, very good to hear that even though there is a war going on in Europe, there is pressure on the prices from energy, and there is obviously the concerns about inflation. The economy isn't collapsing as some people are really thinking. So that's a really, really good news to know that still the companies are beating estimates. The guidelines might be lower, but there's no surprise yet. Even for Amazon, the loss on Rivian definitely was not unexpected.
Yeah, they knew Rivian's gonna basically kind of miss the mark on that end. Tomorrow we have the oil companies reporting. So Chevron, ExxonMobil, this would be interesting to see how these, I don't think Chevron has had a year this profitable. Like they are rolling in free cash flow right now. It's pretty amazing. If you can see my screen, I'm in our trading terminal, by the way. So I'm in the calendar page. Really powerful. It tells you about earnings. It tells you about upcoming dividends, upcoming IPOs, and economic calendar. So like for example, tomorrow we have personal consumption expenditure number coming out. You can see what is the expectation. Next week we have the job data coming out. You can see what the expectation is. So very, very powerful tool made by us and the folks you see in the Andrew's background. They're working extra hard. We appreciate all their hard work. Next week, Andrew, any interesting earning? Oh, Starbucks is definitely going to be interesting, Andrew. They're down, I think, more than 40%.
From all-time high?
From all-time high. This year alone, I think they're down about 30%. So, a lot of pressure on Starbucks in terms of wage prices going up, unionization. A lot of stores are becoming unionized. Howard Schultz, the legendary CEO of Starbucks, is taking back as an interim CEO. In an effort to turn around the company. We'll see how that will be impactful. This is, I think, Expedia. Expedia could be interesting on Monday as well to see how travel is picking up. We saw Expedia. Airlines really rally last week.
Definitely, yeah. Definitely. The sales and that they had in the last quarter, that would be very interesting to know if people are still traveling or not. Airlines are holding up really nicely.
Yeah.
So American Airlines is up 2%. It didn't really sell off crazy, American Airline, the last 2 days when everything was selling off. American Airline didn't sell off, and they're still holding up very, very well. They're far from all-time high, but the lows of March of $12, they're actually trading at $20 right now. So airlines were holding up really nicely in the last couple of days, big sell-off.
Yeah, it's really amazing. One of the things that was kind of surprising to me, Andrew, was Boeing. That reopening trade, you would think that, hey, Booking.com is going to do well, Airbnb is going to do well. If people are going outside and they're not watching Netflix, then they're probably going outside doing things, right? So Expedia should do well, Airbnb should do well, and then Boeing should do well. But Boeing really missed the mark on the...
Exactly, we don't know what happened. I don't really exactly know the news on Boeing. Obviously, they had a lot of issues with the government on the 737 MAX. But to be honest with you, I don't know. I didn't read the transcript or news on that. That's something that would be interesting to know why they dropped.
Next week Thursday, man, there's a couple of really good really good earnings. Shopify down almost 80%, and Block Square. So these two could be really interesting, really volatile. If you're an option trader, these are kind of your dream. You definitely want to play these companies. These are beaten down companies, stressed out, implied volatility is high, so you want to take advantage of them. So they're definitely in my playbook of playing them.
We do have, Apple is running up, guys. I don't know what happened. They probably released their earning. Apple is up 8% now, up to $170. That is amazing. So I don't know exactly what happened and what they said. The heavy volume is coming in as well. So Apple is coming back and saving the market one more time. Thank you, Steve, and all the Apple employee. But definitely there was a big rip came up. I don't know what they said. Probably guidance is really good.
Apple second quarter revenue, Andrew, $97 billion. If you can see my screen, estimation was $93 billion. So very, very healthy, strong beat.
Excellent. That's excellent. And including, we also have to consider that there are almost 2 months of the chaotic, Shanghai lockdowns, and China is again dealing with the COVID situations. But definitely very solid and very heavy volume right now going on Apple in the after hours. Roku is still ripping higher. It's up 18% now, so that's also good news for streaming services.
And for Cathy Woods.
And for Cathy. Cathy Woods has Roku?
She has Roku,
yeah. So that's finally there's some relief for Cathy Woods.
Robinhood, shares fall as losses widens, shrinking revenue, fewer active users. Obviously, nobody, especially when your average account size is about $4,000, you're not going to be trading a lot in this market, in this condition. Robinhood falling. We know they laid off 10% of their staff. Andrew, do you think at this valuation, like they're basically trading below their final round of their private funding, so their Series E, now their valuation right now is lower than their Series E. Do you think someone's going to acquire them, maybe a TD or some bigger brokerage firm they still have 25 million users.
It's very possible, but Adi, you have to also consider the fact that the boom of retail traders were during the pandemic.
Yeah.
And that boom is gone. And then the cryptocurrency trading, as much as people were expecting that is going to completely replace trading for Main Street, it didn't happen. So their business models are really in the very, very serious questions. And yes, TD might buy them, but do they really need to buy them? All that 25 million user, how much contribution they can have to the current TD business model, what innovation they can bring, what kind of market share they're bringing. Does TD want to really deal with these 25 million mostly undercapitalized traders or not? So, this is one of those companies that might be back to private or might be acquired with another one, or very well it can go into the full bankruptcy. Recently they released 10% of their full-time staff, which is huge for a company of this size.
Yeah. We talk about average account size. If you're interested to know, there's a really simple way to calculate it. You look at what's their asset under custody, so AUC, and you divide that number by the number of funded account they have. Let's say they have 10 million and they have whatever, like 100 million under custody, and then you just divide these and you say, okay, the average account has about $10 million in them. So when you do that calculation for Robinhood, the number is only about $4,000. So average person in Robinhood only has about $4,000 in their account. So how much payment for order flow can you sell on someone who has only $4,000 in their account?
Exactly. That's a very good question. So nobody really knows what's going to happen. That's $1 billion question. But I wonder if traditional brokerage companies are actually interested in this type of business model. All of them already have the free commission systems, and they're aggressively going after users who are interested into the free commission brokerage. So instead of spending a lot of billions of dollars on Robinhood, they can spend that money on to acquire that market share from Robinhood and put pressure on Robinhood. I definitely don't want to be an investor in Robinhood.
Yeah, definitely tough. They are trying some new stuff like offering debit cards, loan products, securitization, things in that nature. So they're also evolving their business model. It's not like they're not working. But yeah, definitely stock price has been down. TDOC, Andrew, is now down almost 90%.
TDOC, that's we
Teladoc.
discussed that about. It's one of the biggest holdings of ARK Innovation, Cathie Wood. And unfortunately, what we are seeing is, TDOC is different from.
TDOC is Teladoc, yeah.
40%, So it's down 40%, trading at $33. I traded actually this morning. I got stuck into a halt, and I lost money on that. But considering the volatility, I knew I have to trade really, really small shares.
I read somewhere, and I know for a fact she did, but I don't remember the exact number. She bought I think 100 million or something like that, some astronomical number of TDOC 2 days before the earnings. So.
That would be like $60 million loss for investors.
Yeah, right away, in a couple of days.
I wonder if she's still staying in there or not. And that's another thing that happened with, who was the person on Netflix?
Bill Ackman.
Bill Ackman. So he made a mistake. He made a bet on Netflix, and then there was a huge drop, and he exited the position with how much? $200 million loss or something? $360 million loss, but he exited the first day.
Yeah.
And at like $240 per share, and then Netflix right now is trading at I think below 200. So he didn't stick into the loss that he had, and he quickly exited that.
Yeah.
But it's very important to see if Cathie would change her attitude toward this company or not. Shouldn't, based on her fundamentals, because what she says is that I'm looking for the next 5 years. I'm not looking for the next quarter.
Yeah.
But this kind of mindset, you have to be able to tolerate these kind of drop downs as well.
Let me go to Twitter. I want to show this tweet. I thought it's really interesting. There's always this thing of rabbit and turtle. Like a smart investing versus like really momentum, like a rabbit style trading. And Chris Bollenstrand posted this that I thought was really interesting. Is Cathie Wood was beating Berkshire Hathaway in 5 years, and as of today, it's now underperforming it. And you can see the blue line here on my screen. If you can see my screen, this is Berkshire, going up steady, going up really, really steadily. And this is Cathie Wood, going up, going parabolic,
Wow.
and going down, and now it's underperforming. So, this type of momentum style funds, and I know a lot of people have bought here, have bought here, have bought here. So
that is so disappointing. Such a huge wealth and market capitalization just went wiped out. And Cathie Wood has always said that our firm time frame is 5 years.
yeah.
And now in 5 years, you haven't even beaten Warren Buffett, who's more into value investing and not into the growth stocks.
Yeah, exactly. So very, 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 very interesting stuff is happening. This by far is one of the most challenging, but at the same time most fun markets we've seen.
Oh,
right,
it's so fun to trade this market right now, and especially if you know what you're doing, and especially if you know the concept of risk management, the volatility is just unbelievable. I just posted a tweet, a few minutes ago that you can see the volume and the volatility of the candlesticks since January. It's just unbelievable compared to the the bull market in 2021. Every day you can trade indexes. But it's in the bull market, usually you can't trade indexes. There's not enough volatility. But now it's just 4%, 5% up and down. That's unbelievable for trading.
It's definitely unbelievable. The type of market that we're having is a really choppy market. Whatever some people call it, the kangaroo market. Up and down, up and down. And when market is rallying strongly, that's usually when implied volatility goes down. And I've shown this in chat room many times. They're negatively correlated. When implied volatility is going down, it makes it harder for traders, right? Especially to trade the index. So very interesting. A couple of stuff, Andrew, from so Meta had earning yesterday. We couldn't really talk about it because we didn't have time to dig into their earnings. But I spent some time and I dig into their earnings. Their revenue was up. One of the things that was really, really powerful was Reels, and basically 20% of usage was from Reels. And Reels, we know TikTok was taking away a lot of that kind of attention time in Reels, and that's kind of good that Mark Zuckerberg is spending a lot of money and a lot of time into Reels. And he talked about looking at cost and kind of managing cost and ensure that profitability is still number one factor, and market really liked that as well. And he said 3 main areas of investment. That's your Reels, your ads, and lastly, Metaverse. So I think this was kind of gave confidence back to the investors that, hey, Mark Zuckerberg is not going after some crazy unachievable dream. He's still a very prudent businessman, and he knows how to run his company. So, and Meta is up quite nicely. It's great to see Facebook up. It's such a huge market cap, 500 billion. You don't want to trade like a shitcoin for the health of economy.
Yeah, no, that's great. Very, very nice of Zuckerberg, and congratulations really for him to building this company and putting it back up on track. And I'm very glad that Wall Street again had a good look at Meta.
So Andrew, since today's our kind of last live since next week, where do we go from here? Let me bring up QQQ, or maybe you can bring it up in your chart. We saw that triple bottom that we talked about, that 320 level being tested a couple of times, or 310 level.
Yeah, so I think the most important thing is QQQ is really fighting the $320 level, But the most important element right now, the market is that the macroeconomic data, how the Feds can control the inflation, and that's definitely their highest priority. And we have to see exactly if they can have a soft landing or not. If not, it can be trading in the range for a very, very long time, or it can be in a downtrade for even longer period of time. Yeah. Market is definitely in oversold conditions, but market can stay in oversold condition for years. So that doesn't necessarily mean that we go back to all-time high, anytime soon. My guess would be we are fighting these 320 levels for another 3 months to get more data on the inflation. We might go back and forth between 350 to 320. So we get into a range trading, and hopefully we don't break the 315 levels. Yeah. Breaking such an important level for QQQ or SPY requires a really, really significant macroeconomic situation, like another war or another, big constraint, a shock to the economy.
Major catalyst, right?
Major catalyst that we want. More than one company. It's just more, whole the U.S. economy.
Yeah, exactly. But no signs of that yet. Very interesting. IWM rallied as well today, which was good. Small caps.
I think it was completely and now everything is completely correlated. What I see here, I can't find any correlation. I cannot find any difference between SPY and IWM really. Maybe on an intraday a little bit, but overall, when you look at it, it's just they're completely correlated with each other, and it's just something that have to consider. IWM also starting from November has been in defending the 188 area level and going back and forth between 200 to 188, and it might stay in that environment for longer period of time until there's some better news and more prospect of growth happens.
Yeah. So I'm looking at pretty high correlation. If you can see my screen, I'm just looking at the SPY and IWM since basically a start of 2021 till now 2022, and 0.61 correlation, very high. So 61% of basically deviation in IWM can be explained by S&P 500. So really interesting, right? Really highly correlated, as you mentioned. Well, I think that's about it. We covered a lot. Anything else, Andrew, you want to cover?
No, it was really crazy, volatile day, and what we are seeing here right now is Apple is continuing to hold a little bit, going back to about $170, $166. Definitely, we're gonna look into that, and hopefully the bulls can get control of the market a little bit. There was a definitely brutal start of the week, and hopefully we can see some momentum going up to the upside.
Yeah, definitely.
All right, guys, check out tradingterminal.com if you want education or being part of the community. BearbullTraders.com is the community of serious traders that we systematically look at the market and find trading opportunities. We also have a stock market simulator replay that if you want to practice your trading, you can go to stocktradingsimulator.com and sign up for free. We built this with love for you, and we hope that you can actually get some help replaying that. Make sure to sign up so we can actually send the emails and homeworks for you, and follow Ardi and I in Twitter. At Bearable Traders is my handle, and Ardi is on Twitter with Ardi Aziznia. So we actually send the link here in the chat comments.
Yeah, right here.
And thank you so much for thumbs up. Your support, like, subscribe, and everything. It really helps us, and hopefully we can actually grow the channel and bring all the serious traders together in this channel.
Yeah, exactly. Yeah, it was fun. We'll see you on Tuesday when we go live again, talk about the market, a lot of earnings. And tomorrow, don't forget, if you follow us on Twitter, we're going to go on Twitter Spaces. What time we're going on, Andrew?
I think we decided that 11 our time, which would be 2 p.m.
2 p.m. Eastern.
So that's what I have in my...
2 p.m. Eastern. Andrew will probably send an email about it, but 2 p.m. Eastern we go. The good thing about Spaces is we can really collaborate. We can really have a dialogue and a conversation, because a lot of the people can actually, request time, ask their questions. So it will be a two-way dialogue. I'm really excited for that. It will be fun. It will be fun. First of many, hopefully.
Awesome. Thank you so much, and see you tomorrow morning in the chat, guys.